Microphone check 1 2 1 2. Good morning, good morning, good morning. This is Khalid Nathan Aleem, the real estate boy, and welcome with Morning with Khalid. Today we are going to be talking about how to apply Warren Buffett's investment approach to real estate. Okay, I'm going to be talking about this article in Entrepreneur Magazine. Hopefully they don't cut me off. Okay, but this is an opinion express entrepreneur contributor who wrote this article. So I'm going to go through this article and we're going to see whether I like this or whether I don't. Okay. All right. So again, we're talking about how to apply Warren Buffett's investment approach to real estate. Everybody should know who Warren Buffett is. Okay. But if you don't, he's coined as the greatest investor of all time. Okay. This is what they say. So he's super old, super rich, and he's just been, I am scared, home alone, I want somebody. Okay, I'm over here getting spammed doing TikTok, but whatever. So this is Warren Buffett's. This guy's taking Warren Buffett's approach to investments, and he's taking it to real estate. So again, Warren Buffett is called the greatest investor of all times in the stock market. Okay, so he's written many books, and what this guy's going to do is take his approach, to investing in stocks and put it to real estate. Okay, and so I'm gonna be talking like I'm gonna be reading this, reading this article, and then we're gonna be taking the jewels that we can from it. Okay. All right, so let's get busy. It says, taking advantage of the strategy used by one of the world's most successful investors can lead you to major profits in an area you may be overlooking. Okay. So it says, at just 11 years old, Warren Buffett learned one of his first lessons about investing. He bought 3 shares of stocks at $38, which quickly dropped to $27 before slowly creeping back up to $40. Young Buffett sold the shares for a small profit. Later, the stock jumped up to over $200 a share. Okay, feeling the regret of selling so quickly, he realized the importance of patience in long-term investing. So, for those of you who don't know about Warren Buffett, well, he's about to tell you about Warren Buffett's approach. Okay, it says Warren Buffett, and if you don't know who he is, Google him. Okay, Google him. Warren Buffett learned to play the long game, and his approach to investing can be applied in other areas that some people fail to consider, like real estate. Buying real estate is one of the most significant investments most people will ever make. It can be hard to imagine that paying such a hefty price tag and keeping up with monthly payments will ever be worth it. But with patience, it pays off to make that long-term commitment. Learn from one of the most successful investors in the world and transform your perspective on how purchasing real estate, both personally and commercially, can impact your life and business. Okay. So Warren Buffett he's famous for long-term investing. Okay. That means not saying, okay, what's my investment going to do after a week or two? So he's famous for long-term investing, and he's famous for investing on what makes sense to him. So that's his thing. Like, his thing is, don't speculate. Okay. Invest in things that you know and go out long-term. That's his thing. Okay. So it says, here's how. So again, this article, this guy is comparing Warren Buffett's investment strategy in investments, and he's bringing it over to real estate. So let's talk about it. It says, make long-term investments. This article says nobody buys a farm based on whether they think it's going to rain next year. They buy it because they think it's a good investment over 10 to 20 years. So this statement means that when people, for example, when they buy farms, they're not saying, okay, is it going to rain next year or not? They're not buying it. They're saying, okay, this is going to be a good investment for 10, 20, 30 years. All right. The article says young people with only a few years in business may find it a little scary or confusing to focus on short-term gains, but long-term investments are really profitable ones. Warren Buffett doesn't care about getting in on the ground floor or waiting for the perfect time. He looks for solid long term investments like when you purchase real estate. Watching his dad, learning from his mistakes, and building upon those experiences taught Buffett the benefits of long term approach early on. So when people, Warren Buffett in stocks, okay? Does anybody want to? Okay. Warren Buffett in stocks, he doesn't look at the fad, okay? He doesn't look at the fad. What Warren Buffett does is he invests in solid investments for the long term. This is what Warren Buffett does. So when people are looking at real estate, they should do the same thing. They should look at it going out long term. Now, people always ask me, Khalid, do you think this is a good buy, or do you think this is going to go up, or what? I always answer them like this. It depends on your time frame. If your time frame is 5 years or less, you're speculating. You're speculating. If it's 5 years or less, I don't know what's going to happen in the next 5 years. We can see a downturn, a bear market for the next 5 years, and everything can go down. But I will tell you this. I bet you dollars to donuts, if you go out 20, 30, 40 years, everything's on sale. Absolutely everything is on sale. So it doesn't matter. I actually had, man, and this one that I'm trying to get back, had a young guy who was looking for a duplex. And I'm going around with him and I'm showing him different duplexes. And he has a problem with this one and this one and this one. And I seen him and I'm just like, listen, man, it really doesn't matter which one you pick. You're only going to lose if you don't get something, because you're 22. He was like 22 or 23. You're 22 or 23. It doesn't matter. As long as you keep this product, I'm what? I think I'm 44. If I had a property 20 years ago, it doesn't matter where in America that property was. We up. We up. And this is what I was telling him. Listen, it doesn't matter. Like, you're going through these properties and it's like, oh, I don't like this. I don't like this. I don't like this. Listen, you can throw a dart anywhere. And if you give yourself 20 years, the real estate is going to be up. And it's going to be up. It might not be stuck. It doesn't matter. Doesn't matter. You're going to, that's my thing, buy and you're looking to hold that puppy for 10, 15, 20 years. How are you not going to be up? And that's why I tell people now, go back 10 years, any property. Go back 15 years, 20 years, any property. You can go back 30 years. If you go back 30 years, everything's up. Everything's up. And that's what I tell people. If you go 20 years out, if you buy a home, and what he says in here is that Warren Buffett doesn't care about getting in on the ground floor or getting in at a perfect time. So it's just like, if you apply that to real estate, people want to, oh, well, is the neighborhood changing, or is it going to be gentrified, or is it going to be this, or so they're trying to time the market, which some people can, and some people have made a lot of money. They're looking to time the market. But if you're looking to buy and hold, you don't have to time the market. It doesn't matter. It does not matter if you're looking out 10, 15 years. It doesn't matter. What can you afford to buy? Buy a solid investment. And if you go out 10, 15, 20 years, you good. Well, this is the same thing as Warren Buffett, what Warren Buffett's strategy is with stocks. Warren Buffett's strategy in stocks is to buy a solid investment. Okay. Buy a solid investment and look to go out long term. That's the same thing with real estate. Buy a solid property. Okay. And okay, so you may say, okay, what's not a solid property? For example, something that's not a solid property is buying something on a swamp, okay, or buying something in a crazy flood zone, something like this, okay, or a toxic waste where something like that, okay. But if you go out there and buy a solid investment, how else do you know it's a solid investment? It has to cash flow from day one. If it cash flows from day one, it's a solid investment. Of course, as long as it's not tearing down, or it's not falling down, and you're paying an exorbitant. I'm not saying to be dumb. I'm not saying to be reckless. No, it has to be a solid investment. What's an easy way to know if something is a solid investment? That it cash flows from day one. What does cash flow mean? Is that if you take the monthly mortgage and the expenses, and the monthly income, meaning the rent from the tenant, is more than that, then it's cash flowing. You're not coming out of pocket every month. So as long as it cash flows, you're good. That's the way of knowing whether you have a good investment. If it doesn't cash flow, then you're speculating. Again, if it doesn't cash flow, then you're speculating. Don't speculate. You don't have to. You don't have to. All right. Let's move on. So it says when you focus on short term, it could be hard not to sweat the minor setbacks. So instead of jumping on the bandwagon of a fad, make investments with a broad perspective. I've watched, and when I say it's not me, it's the guy that's in the article. I've watched business and real estate for over 45 years. Seen trends come in, get hot, cool off, and become forgotten entirely, all before coming back again like it's brand new. With a more expansive frame of reference, you can easily see how real estate pays off more than any promise to get rich quickly. All right. So this again plays to what I was just saying. Short term. If somebody looks at something short term in real estate, what's short term? About a year or 2 years, 3 years. This is all short term, okay? But what I want y'all to do is I want y'all to like this post for me, or like this for me. All right, I'll give y'all 1 second. Like this for me and share it while I scroll down here. All right, like this for me and share it. All right, so we just went over as far as make a long-term investment. When you're investing in real estate, way to be safer is think of it long-term. Think of it going out 20, 30, 40 years. And when you're doing that, what do you need from day one? It has to cash flow from day one. Again, it has to cash flow from day one. All right, next. Worst case, stay safe. That is the title of the next paragraph. Worst case, stay safe. So the article says, only buy something that you'll be perfectly happy to hold if the market shut down for 10 years. All right. With a long-term lookout, Warren Buffett knows to plan for worst-case scenarios. Covering your basic needs should always be part of the plan. An economic crash can leave you with nothing, but invest in real estate and you always have a place to live and work. Run a building for $10,000 a month, and when you leave 2 years later, you're out $250,000 with nothing to show for it. Purchase and sell that same building after 2 years, and even if you only break even, you get back those 2 years worth of payments. Not to mention the income tax deductions that save you tens and thousands of dollars. Okay, so this guy is drawing a scenario, okay? He's drawing a scenario that if you rent a building, or let's not say a building, because a lot of us don't invest in commercial properties. Just say that you invest $1,000. You're renting an apartment and you invest $1,000. So if you invest $1,000 over 2 years, now you're you're out $24,000. Okay, so after 2 years, you're out $24,000. Now, if you had bought that place and you had just broken, you had just broken even. If you had just broken even, then you would have got your money back after 2 years. Okay, so then he's just showing you now there are reasons to rent. Not a lot, but there are reasons to rent. For example, one of the reasons to rent is that if you're moving in a new city and you want to get the lay of the land, so you move there, you rent something because you don't know where stuff is at. Okay, and I tell people that when they come to Philadelphia, I tell them like, maybe you should rent first. Rent so you can see the lay of the land, and then once you see the lay of the land, then you can buy something. Okay. So in this paragraph, he's saying that plan for the worst. What's the worst case scenario? And this is why I tell you guys that when you buy something, it has to cash flow from day one. Because if it cash flows for day one, you have that tenant maybe on a year lease. So the market could crash. The market could go down. But that person is still obligated to pay you. That person is still obligated to pay you for that year. And now you're cash flowing. What's better is that if you have some room, maybe you buy something and the mortgage is $100,000 is $500, and you're getting $1,000 a month for it. So that's $500 worth of cushion. So even after that person moves out and the market shuts down for 10 years, you got $500 of cushion where you can lower your price. Okay. So anyway, I think you're picking up what I'm putting down. Okay. So it goes on to say worst case scenarios can come even in the best of times, but having real estate investments will cushion your fall. In 2001, and again, this guy's talking about his situation. In 2001, I was living in California. My company was worth $100 million, and I was a high flyer. Then September 11th happened, and it all disappeared overnight. After 10 years of working my ass off to build my business, I ended up with nothing to show for it. But I still had my house, and that saved me. When I sold it a year later and moved to Florida, the money I made in the sale was everything that I had to my name. While spending no time at my house at all, I made over $100,000 just by letting the market flow, which is called natural appreciation. Money that I used to get my next multi-million-dollar business off the ground. So this guy is talking about his situation where he bought a house. He bought a house and he had a company. The company was worth $100 million. But he's saying September 11th hit and the company went down, disappeared overnight. I don't know what he was doing, but disappeared overnight. So he didn't have any money. So what he did is a year later, he sold his house. And with that money, he was able to go and buy, or he was able to go and get his multi-million-dollar off the ground. That's why somebody might say there's no investment like real estate. Because you can live in it. You can't live in a stock. You cannot live in a stock. So just by natural appreciation, there's two types of appreciations. There's forced appreciation and there's natural appreciation. Natural appreciation is when you don't really do anything. The market or the neighborhood or things you can't control, it just went up with time. So you bought this house for $100,000, you lived in it, and in 10, 15 years, or let's say the next year it went up 40,000. So now it's worth 140,000. You didn't particularly do anything to the property. This is natural appreciation. Forced appreciation is, for example, when you buy a fixer-upper. So you buy a fixer-upper and you buy it for $40,000 and then you put $60,000 into it. So you force the appreciation. Now it's worth $200,000. This is forced appreciation. Okay. So what he's saying here is that even in bad times, it may be real estate or it may be outside of real estate, but because he had this piece of property, he was able to participate in the appreciation of the market. And we just seen that. We just seen this. Okay. The markets have been going crazy across America. Across America, the markets have been going crazy. Appreciation in the last year is like 20%. So we've seen the markets go crazy. And if you didn't buy a home, or if you didn't own property, you didn't take part in that appreciation. You didn't take part. So yes, renting has its place. It's a small place, but renting has its place. But if you own the home when the markets go up, you can take part in it. If you're renting, you can't take part in it. You cannot take part in it. So that's why it's important to earn real estate. All right. So again, in this article, what it's talking about is we're taking Warren Buffett's investment strategy, and we're putting it over to real estate. Okay. Like this and share this from me real fast. Hit the like button for the algorithm. Hit the like button for the algorithm. Hit the like button for the algorithm. All right. So first we talked about Warren Buffett. He looks out long term. So when you're looking at real estate, look out long term. Don't look out the next year or the next 2 years, or how much is it going to be in the next 2 or 5 years? How much is it going to be in 10 years or 20 years? Okay, that's the first one. Number two is worst case scenario, stay safe. So you're looking at this property. Okay, what if we have a bear market for the next 10 years? How do I protect myself from that? Well, with real estate, make sure it cash flows from day one. Make sure it cash flows from day one. All right, let's go down to the last one, and this is the final one. Patience brings great reward. Well, don't they say patience is a virtue? So again, this last one, patience brings great reward. It says someone sitting in the shade today because someone planted a tree a long time ago. I like that one. I like that one. Again, someone sitting in the shade today because someone planted a tree a long time ago. All right. It says, at the core of Warren Buffett's investment strategy is patience, a skill that requires little effort but goes a long way. Not everyone realizes how much money they can make just by spending years living in their house and paying their mortgage. A working class retirement may be about $100,000, but buy a home for $100,000 and pay it off over 20 years, and your net worth jumps because that $100,000 house is now worth $400,000, all from a passive investment in real estate, which AKA your home. Okay. So what he's saying here is that working class retirement may be $100,000. So you may have a 401k, Roth IRA with $100,000 in it. Okay. But if you buy a home for $100,000 and pay it off after 20 years, now your net worth jumps. Okay, your net worth jumps because that $100,000 now has become $400,000. Now, if you have that $100,000 and it's in an IRA, you still got to pay rent. If it's in a 401k, you still got to pay rent. So with that $100,000, which is in a home, and it goes to $400,000, yes, you're paying the mortgage, but you're getting that money back with appreciation. Okay, let's move on. It says no investor can make 120% every 2 years, but invest in a house and you can do even better. $150,000 made on the stock market in 2 years still has a 25% capital gains tax. But just live in your house for the same amount of time and the government lets you sell it tax-free. Up to $500,000 profit per couple. Real estate prices are most likely to increase more than any other stock. And last year in Florida, they were up 20%. I bought, okay, this is this guy talking in the article. I bought the building I'm currently in over a year ago, a year and a half ago, for about 2.2 million. Spent about 400,000 fixing it up, and I've already made nearly $1 million increase in equity. So what this guy is saying here is that you buy a home and you're patient. You buy a property and you're patient. Patience, and I know that we're living in the and some of you are looking at me on YouTube, but I know we're looking in the YouTube age. I had a guy, right, that I used to work with back in the day, and he told me, he was explaining, he was like a movie buff, and he was explaining how, in general, people's patience kind of go with the trend. I'll explain. I don't know if you guys know this movie. It's called Lawrence of Arabia. Okay, it's called Lawrence of Arabia. If you ever watch Lawrence of Arabia, and watch it, there's long periods of just silence. Okay, there's long periods of just like still camera, where they're just like kind of looking at the desert, but there's nothing happening. There's long periods of that. So what this guy was saying was that, okay, you had that time. Then when MTV came out, then it got shorter. Okay, so people's attention span got shorter because of MTV. So now in those same movies, you can't do the same things that you did in Lawrence of Arabia because people will go crazy. Oh, what is this? It's taking too long. So then after that, you have YouTube. So YouTube, now, if you look at movies, they're like boom, 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 and they gotta keep hitting you because people in general, their attention span has gotten shorter, and now we're in the TikTok age. Okay, I'm on TikTok too, but we're on the TikTok age, and now people's attention spans are like this. So if you go to a movie now, man, it gotta be. It got to be boom, 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 because people's attention spans are so short. So why am I saying all this? I'm saying all this because when you're looking at a real estate investment, it needs to be, if you're taking this strategy, because there are people who speculate. There's people who just want to get in and get out. Okay. But I'm advising you don't do that. Have a long-term strategy. Short term is like 5 years and under. Because what's going to happen in 5 years and under? Who knows? Okay. But if you go out 10, 15, 20 years, again, everything is on sale. If you go out 10, 15, 20 years, everything is on sale. And that's how you should look at it. All right, so let's keep on going with this article. So this last paragraph says, you don't need to be Warren Buffett or have the so-called Midas touch to excel in real estate. But I recommend 2 rules. First, in real estate, if it sounds too good to be true, buy it. That's funny. So this guy says, in real estate, if it sounds too good to be true, buy it. Ignore the million what ifs that keep you from taking action. Second, no matter how big of a mistake you make in real estate, 20 years from now, you'll look like a genius. Whether you're looking for a new place for your family or your business, make the commitment, stop second guessing, figure out the down payment, and invest in real estate. Years later, you'll thank yourself. I like that. I'm definitely with that. What is this thing doing? I don't know why it's doing that, but years later, you'll thank yourself. So he's saying, look, invest in real estate and wait. Don't wait and invest in real estate. Invest in real estate and wait. Okay? All right, Charles. Khalid Nathan Aleem. If you're looking to buy a home, sell a home, or invest in real estate, I got you. And if you're a realtor and you're looking to make a move, to another brokerage, contact me so we can talk about the only, and I mean the only, realtor owned brokerage. Okay, hit me up. All right, y'all, I'm out.